Legendary investor Micheal Burry foresaw the two most recent crashes, although Burry once gained notoriety for foreseeing the 2008 housing meltdown. His perpetually pessimistic outlook hasn't worked in his favor lately. We could all be moving towards the crash of the century, as he describes it, because the market is responding in such an unnatural and dangerous way. Burry tweeted, "At least I tried," 2 weeks earlier. Days later, when the stock market saw a significant reversal and became positive, he tweeted a headline from 1929, when a similar situation occurred and everyone believed everything was okay just before everything fell apart. "This is all a lie. A bigger crash is coming." Micheal Burry believes a bigger crash is coming. But what stocks are going down, and what will happen after? Investor Micheal Burry identified a misunderstood, out-of-favor stock long before retail investors on Reddit inundated public boards with GameStop theories. Now, Burry sees hints of the frothy markets of 1999 and 2007. "I don't know when meme stocks like these will crash, but we probably won't have to wait long because Wall Street has joined the bandwagon, and I think the retail audience is completely involved in this topic," according to Burry, who spoke with Barron's through email. "There is a limited amount of fresh money left to join the bandwagon." Burry, who made a major appearance in the book and movie The Big Short after making a profitable wager against the housing market before the implosion of subprime mortgages, thinks meme stocks are the newest Wall Street fad that might harm normal investors. Everyone who was profiting from dot-com stocks, according to him, thought the trend would continue in 1999. People who were wealthy in 2007 and leveraged the hilt in numerous properties believed it would also continue. Burry continued, "Momentum and social media are now a part of the strategy for Wall Street, and they are in a better position than retail to participate, sniff out, and start gamma squeezes in the options market." The latter part of his statement alludes to increased demand for shares caused by market makers scrambling to hedge call options they sold, a phenomenon that probably fueled meme stock trading. Burry rose to prominence as a GameStop bull in the second half of the year. In August of the same year, he told Barron that concerns regarding disc-less consoles were exaggerated. With the launching of new Sony and Microsoft consoles in 2020, he anticipated recovery in free cash flow. Retail investor Keith Gill praised Burry's bold thesis on the now-famous Roaring Kitty YouTube channel, which foresaw the possibility of a GameStop squeeze. Burry could not have predicted the epidemic and the ensuing console shortages, but his prediction was undoubtedly coming true as shares started to rise in the second half of 2020. Although he adds, "For me, if I get within years of a thesis being true, I'm thrilled. The majority of people concentrate on days, weeks, or months." After Chewy co-founder Ryan Cohen disclosed a 9% stake in the business and demanded significant changes in 2020, the stock price surged back to double-digit levels. According to regulatory records, Burry eventually sold the remaining portion of his GameStop investment for a profit during the fourth quarter of last year. When questioned about businesses like GameStop and AMC Entertainment Holdings, which have sold millions of shares at skyrocketing stock prices, Burry notes that it wasn't that long ago that GameStop was repurchasing millions of dollars worth of stock as recommendation. As long as they go with the law, he believes businesses should be able to sell stock. For these businesses, this is a blessing, Burry continued, as many listed companies will attest. Having cash on hand alone does not justify significant multiples from the market. Micheal Burry, a well-known investor and the founder of the investment company Scion Asset Management, issued a warning on Friday about an impending consumer slump and additional earnings difficulties. He is well recognized for being the first investor to predict and benefit from the 2007 to 2010 U.S. subprime mortgage crisis. In The Big Short, a Michael Lewis book on the mortgage crisis that was adapted into a Christian Bale-starring motion picture, he is highlighted. Burry clarified on Friday through Twitter, despite having trillions of dollars poured into their laps, the U.S. personal savings fell to 2013 levels and the savings rate to 2008 levels, while the revolving credit card debt increased at an unprecedented rate back to the pre-COVID peak. A consumer recession and new earnings problems are on the horizon. Two photos are included in his tweet. The first reveals a dramatic fall in personal savings in the United States. The other demonstrates a sharp increase in outstanding consumer credit. As of the time of writing, Burry's tweet had 476 comments and had received 11K likes and approximately 2.5K retweets. On Twitter, many users sided with Burry, thanking him for bringing up the subject and urging others to take note of his advice. Someone said, "This is wild. Even when we dropped cash from helicopters on people, their personal savings decreased and their credit card debt increased. Exactly what I said. Inflation is not a concern," another person wrote. "Debt from consumers is a problem. Monetary policy that favors demand is flawed. The market cannot be corrected through rate manipulation. Americans were flush with money. Instead of concentrating on spending, shift your attention to long-term savings. Stop importing," a different commenter said. The stats contradict the media's desire for the narrative to emphasize how strong consumers are. Energy costs are close to highs we haven't seen since 2008, along with decreased savings, greater debt, and inflation indices that are continually climbing month over month. Numerous people concurred that statistics don't lie, and that the U.S. economy seemed to be at least as dire as Burry had predicted. Elon Musk, the CEO of Tesla, Robert Kiyosaki, the author of Rich Dad, Poor Dad, and Lloyd Blankfein, the senior chairman and former CEO of Goldman Sachs, are just a few of the people who have recently issued warnings that a recession is either already underway or is just around the corner. In a recent tweet, Micheal Burry targeted Bitcoin, remarking that the most expensive cryptocurrency has recently moved practically in lockstep with the biggest U.S. IT stocks. The investor from The Big Short fame tweeted, "Are we sure Bitcoin is not just another risk asset in the NASDAQ 100? The price of Bitcoin, which has fallen from over $60,000 in November to roughly $21,000 today, has fallen in line with the stock market index, according to a chart he attached. In the past, Burry has called Bitcoin a speculative bubble and issued a warning that central banks may view it as a threat to their currencies, which would hinder its growth. Additionally, the CEO of Scion Asset Management has linked the cryptocurrency boom to the dot-com and housing bubbles and warned that ordinary investors in meme stocks and cryptocurrencies are heading for the mother of all disasters. In a recent New York Times piece, Paul Krugman presented the collapse in cryptocurrency values as predictable. This may be the point where the Ponzi scheme has run out new victims, if you think, as I do, that cryptocurrency is mostly a Ponzi scheme. In his earlier editorial this month, the seasoned economist and Nobel winner compared the cryptocurrency rise to the housing bubble. He compared the struggle of cryptocurrency enthusiasts to accept their coins may be worthless to how most Americans struggle to accept that housing prices may be greatly exaggerated and that trillions of dollars of real estate riches may be destroyed. The Big Short appears to have given way to the big scam, according to Krugman. On a recent episode of Bloomberg's Odd Lots podcast, Chanos criticized the cryptocurrency market. He claimed that tokens haven't replaced dollars and haven't succeeded in serving as portfolio hedges, saying a lot of the concepts underpinning crypto's early popularity have basically proven to be not there or wanting. The head of Kaniko's Associates and seasoned short seller also accused some cryptocurrency companies of defrauding their clients and compared them to Ponzi schemes. He described the larger crypto market as a predatory junkyard, and he stands by that assessment. This enormous ecology around it arose overnight in order to essentially extort fees from unwary investors, mostly retail ones. In a recent interview with Fortune, Mark Cuban expressed concern that failing cryptocurrency businesses may be forced to close. Companies that were supported by cheap, easy money, but didn't have sound economic potential will vanish in the stock market and the cryptocurrency market, he predicted. But this video is not professional financial advice, but purely based on our own research and opinion. Here comes to the end of the video. Catch you up in the next one. Bye-bye.